Today, let's talk about the downside to investing in gold and silver. So, of course, gold and silver have been doing very well over the past few months, and so naturally we start to talk about it more as the price kind of gains more momentum and more attention. So I was discussing this concept with a friend the other day that, of course, gold and silver are both great quality bearer assets that have stuck around for millennia. Of course, typically their price movement is not super exciting or volatile, but they seem to hold their value for the long term, so that is a plus. The downside, however, is that in the short term, you kind of take an immediate hit on your money. So in precious metals markets, we have what's called spot price. So that is just basically the advertised price that's, online, essentially, the market price. For silver, it's around $84 at the moment. But spot price is not the price that you can typically get the asset for, especially with precious metals. So the spot price might be $84, maybe trading paper. But if you are trying to actually buy physical silver from a silver, gold, precious metals dealer, you're going to pay a premium. So, for instance, trying to buy that same ounce of silver right now, you're going to pay between $90 and $94 instead of the spot price of $84. So not only are you paying a premium compared to the spot price of the market, when you go to sell that precious metal, if you wanted to sell an ounce of silver, you're not even going to get it for spot price. You might have a merchant willing to pay you $74 for that $94 piece of silver that you bought yesterday. And so not only do you take a hit on the front end when you invest, you also take a hit on the back end when you go to sell that precious metal back to the dealer. And so this creates what's called, a spread. In order for that gold and silver dealer to have a profit margin, they need to sell the product for more than it's worth and buy it back for less than it's worth, or less than spot price. And that spread is how they have any sort of profit margin. Otherwise, they would just be wasting their time. If they're buying and selling, but they're not making any profit, then it's a complete waste of time to be in that business. So it kind of makes sense when you think about it, but as a small investor, we have to keep that in mind, because if we are not willing to hold on to that precious metal for years, even decades, then we kind of put ourselves at risk in the short term, because we pay that premium and then we take a hit when we sell it as well. And so, if you had to buy it and sell it next week, then you're going to lose over 20% of your investment, even if the price stays exactly the same on the spot market. You're losing money immediately if you're selling because of that spread. Now, if you're able to hold on to that gold or silver or whatever precious metal it is, if you are able to hold on to that precious metal for over a decade, then it can turn out to be a nice store of value, or at least a hedge against inflation, a hedge against, the movements of the stock market, because nothing is guaranteed. And so, yeah, it might be an advantage depending on the timing and the price. It might be an advantage to have precious metals in your portfolio. And of course, a professional financial advisor will be able to kind of walk you through that. But it's just helpful to keep in mind that although there are so many amazing things about gold and silver, that we need to be aware of the downsides and the financial risks that we have to take on whenever we actually go to purchase those investments. So keep that in mind, and we'll see you soon.